Welcome back to Broke Man Finance. My name is Adam and today is a fun video for me. I've been looking forward to this all day because really, to be honest, today at work really sucked, and I know that's something that you all can relate to. That's why I'm wearing my Lucky Rocky shirt for perseverance, and I'm also drinking Bud Heavies to help numb the pain. Bye-bye, pain. We are talking updates from one of my favorite stocks out there right now, and one that is, I feel like, completely underrated, that keeps pushing up the charts, yet is still very cheap, in my opinion. I think in a year from now, we're going to be looking back at these prices and kicking ourselves for not buying more. The company I am talking about is Draftkings, ticker symbol DKNG. This is a great deal because they are nowhere near their full potential yet. Draftkings is one of the best short and long-term plays out there right now. And if you watch this video all the way through and you hear all the amazing news that they got going on, they are constantly coming out with stuff. And I'm talking about they're signing major deal after major deal. And not even half of the states are open to legalize gambling yet. So if you watch this all the way through, I think you're going to agree that this is a must-have in your portfolio. If you don't have this in your portfolio, you are going to be losing money for a long time. Draftkings just has so much going on right now. I feel like I have so much to talk about. And we're going to talk about all that stuff, all the fun stuff. We're going to talk about what I think that share price is going to be at a year from now, what that share price I believe will be at in the next 5 years, and I hope to hear your opinion on that too. But we're going to start out talking about the crazy good earnings report that just came out, which is another reason that share price is ticking upward, one of the reasons. But we're going to talk about those numbers first, and then we're going to get into the fun stuff. And speaking of fun stuff, you like that transition, I hope you consider checking out the stuff in the description below, because there's some links to some great stuff down there, links to my savings account, and the one that I'm using that's it's much more different than a lot of savings account out there, and it's the only savings account that I've ever had to give me this level of a return. I'm getting an incredible return right now, but you got to go check it out and use code Adam94. There's links to our Discord. It's free. I know a lot of YouTubers make you pay for their Patreon to get into their Discord. I don't. I want to talk to everybody. So make sure you sign up and come hang out with us on Discord. There's links to our Patreon, other stuff. So make sure to go check that out. And I really hope you consider subscribing if you haven't already. Recently, Draftkings share price jumped up a bit after the company reported fiscal fourth quarter 2020 earnings that beat revenue expectations and growth in paying customers. It went back down a little like the rest of the market did, other than Gamestop, but has since bounced right back up. Now, we could completely just nerd out on those numbers and nothing would make me happier. But to keep it succinct, we're going to just hit you with the highlights because there's so much to talk about. We're going to get through the numbers and then we're going to move on to the good stuff. So here are the key numbers. Losses per share was 24 cents versus an expected loss of 47 cents. Revenue was $322 million versus $232.6 million expected. That's almost $100 million more in revenue than what they were anticipating. Draftkings said it has 1.5 million monthly unique payers as of its fourth quarter. Why do I think that's such a big deal and a telltale sign of what to come? Because in the third quarter, I'm talking about the fourth quarter, but in the third quarter, they had just surpassed 1 million paying customers. Now they're at 1.5, just that quick. That is a big jump in just a short amount of time. That is a fast and high rate of growth. I can dig it. The company also raised its revenue outlook for the fiscal year 2021 from a range of $750 million to $850 million, now to a range of $900 million to $1 billion. The company also raised its long-term adjusted EBITDA target to $1.7 billion from $1.2 billion. If you don't know what EBITDA is, it means earnings before interest, taxes, depreciation, and amortization. Draftkings pointed to strong user activation due to the launch of mobile sports betting and iGaming in Michigan and mobile sports betting in Virginia. Now let me remind you of this. That's just 2 states. 2 states had that much of an impact on the numbers of DraftKings. Michigan, and I'm trying to do this by memory, Michigan, I believe, is ranked 10th in terms of population, with Virginia being 12th in population. Now, the top 4 states have not yet signed on to legalize gambling. We're talking California, major, New York, major, Texas, Florida. Now, as soon as any of those individual states sign on, that is going to be a massive, massive increase in terms of revenue for DraftKings because they have so many people in those states. You're talking those 4 states alone encompass more than 1/3 of the entire U.S. population. Currently, 20 states plus Washington, D.C. allow online sports betting. Now, if you know how many states we have, start doing the math. But that is up from 19 this past quarter. 5 states legalize sports wagering but are not yet operational. And 16 states are working on legislation, up from 6 and 2 respectively. Only 20 states. Think about how many states we have in this country. And 16 more states are working on legislation to legalize online gambling. Think about that in terms of revenue. We're not even halfway done with the country yet, and 16 are trying to sign on to this. DraftKings is going to be a huge beneficiary of this whenever these states start signing on, and that is going to be it's going to be a major influx of revenue. Whenever companies have major influxes of revenue, what happens to that share price? It goes up. Craig Hallum analyst Ryan Sigdahl views DraftKings stock as a must-own for growth investors because it's still the early innings of a mega trend in online gambling over the next decade. 100%. Over the next decade, we're going to see major growth with online gambling. And DraftKings, in my opinion, is going to lead the way in this, and you're going to see this company grow significantly. These share prices right now, under $70, are going to be a joke in 5 to 10 years. We are going to be looking back, I'm going to be looking back and kicking myself for not buying more. ETF superstar Cathie Wood made a chunk of a purchase on this past Tuesday. Cathie's ARK-K ETF bought nearly 1 million shares of DraftKings for around $59 million. Now, that may be a drop in the bucket for Cathie, but it still bodes well for the bullishness that she has for DraftKings. And we all know what happens to anything that Cathie touches. It makes the news, and then it goes up. In the fall of 2021, DraftKings and Yingling will join forces to bring fans the Yingling Saturday Series, an exclusive free-to-enter college football fantasy contest series timed to every action-packed Saturday game day of the regular season. Shortly after, in September, DraftKings will offer Yingling customizable prediction contests surrounding football game slates. This agreement marks the brewery's first ever fantasy sports collaboration and merges the love of sports and beer, I can dig it, through year-round events. DraftKings is proven to be incredible marketers. There's no one even close to them in this space. That's where a huge pile of their money is going in an advertisement, name, and brand recognition, and it is going to pay off for them bukus in the future. The UFC came to terms on a partnership renewal with DraftKings that a source familiar with the talk said is for 5 years and worth more than $350 million, including more than $100 million in cash. DraftKings will be the UFC's official sportsbook and daily fantasy sports partner in the US and in Canada. In addition, DraftKings will be the presenting partner of the UFC's new timekeeping system. Listen to what Dana White, the famed UFC owner, listen to what he had to say. This is a massive deal that will benefit the UFC, DraftKings, and most of all the fans. DraftKings is the best at what they do in the betting and daily fantasy space, and unlike other sports, UFC has no off-season. The action will be non-stop for fans of UFC and DraftKings. This is the most important deal we've ever done to increase engagement with our fans and reach new ones. The most important deal they've ever done for fans. Think about that statement from Dana White. Things are looking brighter and brighter for DraftKings. I would not be surprised if the day I release this video, they come out with some other breaking news. It's just phenomenal that I wish I could have gotten this video. And you got to remember, they're still doing this with 20 states. Just wait till all the other states are on board. What do you think is going to happen to that revenue? It is going to be phenomenal. This company has got so much more room to grow. And with so many states having legislation on the table, I feel fairly confident that some of them, and some of them may turn it down, some of them may not be ready for it yet, but I feel very confident that at least a quarter of those states will definitely sign on to this, and that's going to be a bigger customer base for Draftkings. That's why I say by the end of the year, I'm saying that Draftkings will be over $100 by the end of this year, and in 5 years, and you know what? And I almost feel like I'm shooting this low whenever I say this, but I don't see why Draftkings couldn't be at $350, $450 in the next 5 years. But again, it all depends on how quickly states sign on, and I guess there's always a possibility that people could make it illegal again. I don't see that happening after the states see how much tax revenue that they're bringing in from online gambling. So I don't see anybody getting rid of it anytime soon. But I guess that's always a possibility. But in five years, 100%, I believe this company could be looking at $350 to $450 per share. And if they hit $400 per share, and we look back to right now, and they're $68 a share, who would not want to take that deal? Let me know what you think that price is going to get to in the next year in the comments. I would love to hear what your guess is. And let me know what you think they could see by year 5. As always, I'd love to hear your thoughts in those comments, and I hope that everyone out there's stocks get greener and greener as we drive through this little correction that we're having. I hope everyone out there stays safe, and I hope everyone out there takes care. Cheers. Bye-bye, pain.